Hello and welcome to a brand new show of India Revival Mission, a show on which we would debate, deliberate, discuss and ideate what needs to be done to bring India back on the growth track. Because of the pandemic crisis, one sector which has taken perhaps one of the highest hit is the entire hospitality sector. So far we've not heard anything special from the government, and we also understand that there are challenges which clearly the industry is going through. So how will the new normal or how would the reboot change dynamics for the hospitality industry? To discuss that and much more about Indian hotels in specific, I have with me the Managing Director and CEO, Mr. Puneet Chhatwal. Mr. Chhatwal, thank you for joining us. It's always a pleasure to have you on ET Now. Hope all is well and you had a safe and a good trip when you went outside India.
Thank you. Thank you for having me, Nikunj. Yes, I had a safe trip and I'm out of quarantine since a couple of days. And it was nice to go out and see what's happening in other places in the world.
So what is happening in the world? You know, the general view for hospitality is that growth is gone, business is gone, and things will take not some time but lot of time before we go anywhere close to the pre-COVID levels. Is the ground reality different than what the public perception is?
No, I think a little bit of both is true. The public perception and the public memories are quite accurate when it comes to taking count of the situation as to where we stand today. But we also know that memories are very short-lived when it comes to, getting out of the crisis. To give you a snapshot, I think April and May were the worst months, not only in India, but also globally. Almost occupancies in hotels crashed to less than 20%. Tourism came to a standstill. Airlines were not flying. So end of May, a little bit of that started opening up, including on the domestic front. And as we speak today, the occupancies have climbed up to close to 50%, of course, aided by the summer travel, especially on the European continent. And now, after that summer holidays are over, then there will be a kind of a decline that we'll witness. I think the similar trend we are seeing here as we enter into unlocking 4.0, we see a lot of interest in domestic travel and domestic tourism, people taking short holidays and breaks, driving to a destination, and of course still reluctant to fly or take other means of transport. So that part is true, that this is what is the situation. Where we are coming from was a complete lockdown, a shutdown of the industry. It started opening up. It's still not fully open. For example, in Maharashtra, the restaurants are not open. In Delhi, they've started. In Bangalore, they've started. The number of cases are still rising. And I think we go through a very difficult phase in the industry. And having said that, I remain, as always, very cautiously optimistic about the future, because it would be fair to say, coming from zero revenues, we are getting close to 30% of the revenue of last year, and hopefully if this trend continues, we'll get very soon to 60, 70, 80, and at some point of time it will level out and also increase. Yes, your question was also aimed at getting back to pre-COVID level. I think there is two things which we'll need to differentiate. One is the absolute amount of room nights and the absolute amount of spend, and then how that spend is spread across the sector. I think unfortunately or fortunately, where the sector stands today, the tourism, hospitality, hotels, aviation, I think there will be a rebalance in the demand and supply situation. So we cannot only look at the demand part of it. I think the supply will also readjust itself. So I think even if companies were getting to 80% of the revenue they did before, or 75, it would still ensure that the outcome on the bottom line is more or less the same.
Fair point. The trend for hospitality industry, hotel is improving even though COVID numbers are increasing. Do you think somewhere on the customer side, the customer A has, in a sense, unfortunate, but in a sense has realized how to live with COVID, and B, they are getting perhaps convinced that a brand like Indian Hotels will use their hygiene, their hospitality, and the good practices to ensure that whatever can be done could be done to minimize COVID?
Absolutely, I think you're spot on. It's whether it is our brand or other brands that people trust. I think in the short to medium term, there will be a shift in demand to brands with trust. And I think, especially with our Taj brand as a nation's leading brand or the strongest brand across all sectors, we do stand to gain that trust and the confidence of our customers, but also all our stakeholders, including our associates. So I think not only that we will do, we have been at the forefront of helping out the state governments and the central governments in hosting the medical staff. We've hosted more than 70,000 room nights alone for the BMC in Mumbai since the outbreak of this crisis to host the medical staff and supplying meals to the hospitals to the extent of more than 2.6 million as we speak today. So I think we have been doing this. We have been ensuring the safety of our associates. We've been hosting them in our hotels. So even though we're allowed to sell 100%, almost 40% of our rooms and other facilities are occupied by our associates because their safety and security is of paramount importance to us. And for them to travel out and in public transport is neither safe for them nor for our guests. So I think we've been doing this and we are very familiar with it. I would actually welcome any people from your channel, but also all of the other guests, whether they're wanting to stay or not, just to come out and check the kind of measures we have put into place to ensure the safety and security of our customers, as that remains absolutely the number one goal.
Uh, Mr. Chatwal, I'll like to draw everyone's attention to something which we discussed last time, which is that you're not going easy on your expansion plans. Most of the companies have decided to take it easy. Why are you investing so much? I mean, is that an indication that you remain bullish, or not bullish, but extremely bullish about the future, barring this 12-month or 18-month lull? Looks like you are making your hotel chains, at least in India, future ready.
Absolutely. Every crisis is an opportunity, and we have used the last 6 months firstly to solve some of the long pending issues which we had not tackled, whether it is buying, 100% of Sea Rock, or also getting 100% control in Cape Town, renegotiating our contracts in New York, renegotiating with the government in London. We have put in a lot of effort into practicing what we call effective asset management. So that is about our long-standing existing portfolio. When it comes to new growth, as you are aware, we have almost 50 hotels in pipeline, which were just contracted in the last 2 years. And 90% of those 50 hotels, or even higher, have no capital requirement from us. They are mostly management contracts. They're service fee driven businesses. We have a few operating leases also in there, especially for our Ginger brand. And actually, we are very excited that the new growth will eventually enable us to bring a change in the business model, get us closer to what we had previously announced as a 50-50 balanced portfolio, a combination of asset heavy and asset light, and so that we are somewhere in the middle. We don't go to the extreme end of the spectrum on either side, and then we are better hedged to deal with any kind of crisis that come in, but also benefit with the right amount of volatility within the portfolio to take the upside with us as the markets begin to come back. So our iconic assets like Mahal Palace in Mumbai, or Land's End, or Taj Palace, or Taj Mansingh, or the likes of West End, they will benefit significantly when the markets come back. But we also would have a series of management contracts, as we have been doing in the last few years. And as you rightly said, of course, some of the hotels could not open because of the lockdown. So as we get into October, we'll see a series of openings of, I would say, openings and reopenings. Opening of, let's say, the Connaught in Delhi, subject to us getting all licenses in October, but the reopening of Taj Mansingh with the lobby, and with the new lounge, the Emperor's Lounge, and the Machan also in West End, or one of our new brands on the brewing, the beer pub called the Seven Rivers with AB InBev, actually happening as we speak. So there is a lot of these projects which will come to fruition. We are looking forward to our flagship hotel opening in Ahmedabad, almost 300 rooms, the Taj Skyline. So we are very, very excited about this growth, and also on the Ginger brand. I think that brand is absolutely variable cost driven model. So there we stand to benefit, and we're already seeing the recovery at that end of the segment is very, very fast. So the Ginger is already expected to hit in September almost 50% occupancy on all the portfolio. If we were to take only operating portfolio, it would be even higher. So I think growth is a fundamental part of not only our company strategy, but of any serious company. And you have to keep growing. You cannot, have a standstill situation uh, that is of no help to anyone working in the system, so that the people in the system, or your staff, your associates, your executives, everybody can grow together with the company.
Some of your bottlenecks are getting cleared. Sea Rock in Mumbai, Taj Mansingh in Delhi, uh, challenges in the pier. How will this change? I mean, what could happen now that Sea Rock clearance is there, Taj Mansingh, the lease is getting sorted out? Operationally, how will this add up?
Operationally, it gives you an opportunity to press what we call the reset button. That's become a part of our strategy for 2020, which we call it as Reset 2020. Um, I think I think the securing Mansingh was a very important point in the life cycle of the company, and I think that's where everything started, and the entire organization got very charged. And we were on a very great journey till COVID hit the industry, and it's obviously it hit us too. But how it helps us is to become more agile, more lean, and create new ways of working. Also, the ability to introduce new concepts, new designs, and lead the charge, as the group has done over the last century. I mean, this is not something which was done only in the last 2 years. Yes, of course, we've been able to solve a lot of issues in the last 2, 3, 4, 5 years. However, the the group has demonstrated an ability to do unique things in, like a first mover, um, uh, and leading by example way, and that has really helped to position the group. And that's how we are very close to the hearts and minds and souls of all our customers, not just in India but across the globe. I think I should add here that
Yes, please.
definitely uh, getting the permissions for Sea Rock and building it together with a partner, and also monetizing on something which we have invested in for such a long time, will definitely help us to deleverage our balance sheet in a very significant way. And it will also help to create the next icon for the city of Mumbai. When you try to visualize the Sea Link with the Land's End on one side and the Sea Rock on the other side, and maybe with the state of the art convention center or residences or other ancillary services, or a seafront walk. I think that is about vision, and that is about building uh, an icon for the next 50 or 100 years for the city of Mumbai.
We all look forward to that because Mumbai definitely needs these icons. Mr. Chhatwal, let's understand a point from the shareholders. And before you answer this, I just want to bring out a point based on our research that smart investors like Rakesh Jhunjhunwala have really invested in your stock because they understand the power of the Taj brand and the Tata franchise, and how in a bad time a company like Indian Hotels, because it's a Tata company, will never have debt crisis. Could you broadly tell us that how will your cash flow picture change this year? Because your fixed costs are not going to come down. Operating cost is something which is variable, but the fact that hotel industry has a lot of fixed costs, that could be a burden on the cash flows.
Absolutely right. But I think this crisis has taught the industry to convert even fixed cost into semi-fixed. We never thought this was possible. But I can give you an example to your previous question. You said you're growing at a rapid pace and still expected to grow at a hotel a month. So, if in the second half of this year we open 2 hotels a month, the average would still be 1 hotel a month for the full year. So what does it do? It gives us an opportunity to redeploy a lot of our staff. If you don't, if you are keeping all the staff and keeping their wages and their jobs protected, one of the ways to redeploy them is within your own pipeline of hotels that are going to open, and at the same time you create a sense of Tajness in the new properties. So these employees exude our service culture, the loyalty to the brand, and they bring it in the new properties so that they are able to stabilize much faster than if it would be with all new personnel coming in. And we have been doing this consistently for a few decades now. But now is the opportunity to significantly drive that process and also become uh, not only agile, but have a lower fixed cost base in our current portfolio. So that's one. The second is obviously on a cash flow perspective. I think protecting cash has been one of our key strategies, even in the past, even pre-COVID. And all our ratios were moving in the right direction. I mean, we're coming from a debt to EBITDA of 6.5 to, last financial year ending at around 1.7. And we are absolutely focused to continue on this journey in a post-COVID era too. And one of the ways we will get there is through the monetization of our non-core assets. We have always given this example, way back in the 60s and 70s, we bought flats to house the staff and executives, but today everyone wants to own their own flat because that's proven to be one of the best investments, especially in places like Mumbai. So we don't need those flats anymore. It's an administrative hassle, but it's also blocking the cash. So why not monetize on those? We had similar situations with hotels in secondary and tertiary markets. 30 years ago, we needed to invest there to get a hotel done. Today, there is enough capital available, so we don't need to own a hotel in a tertiary market. So we did that by selling in one of our subsidiaries and associates in Oriental Hotels. We had a sale of a property in Vishakhapatnam. We had a sale of a property in Trivandrum. We went on and sold one property in Trivandrum and signed another one on a management contract, which is going to be brand new. So you save money in renovations, in refurbishment, and you get a new start with a new property with a new owner on a management contract basis. So this is something that has been ongoing. The only thing that this crisis has done is it has accelerated the process. It has created a more transparent understanding within the system for the people that why this is necessary. So I think there is a general awareness level. If one was to talk about the positive side of the crisis, the general awareness in the hotel industry has become higher. And of course, as being the largest player on the Indian subcontinent, we tend to benefit from that going forward.
So far, there is no special support, grant, or a benefit which has come to the hotel industry. Minus that, what will happen to the smaller players? I mean, are they on brink of extinction?
I am still optimistic given the interactions in the last 3 to 4 weeks, both in my capacity as the president of Hotel Association of India as well as the chair for the tourism committee on the CII. This is the first time I've had, positive assurances that yes, everyone is aware, not only that this industry has suffered the most, but the importance of this industry to contribute to the growth of the GDP. And why does it contribute so much directly and indirectly is because every job created in this industry globally averages to 8 to 10 jobs in other businesses. This is uh, if you create one job in tourism industry, it helps the guy who is going with you on the adventure tourism and carrying your baggages in a hiking thing, or putting your rafting boat together, or the guy who's just using the shikaras on the Dull Lake. So I think there are a lot of such jobs that are dependent on the tourism and hospitality industry, including a guy just driving a rickshaw in the holy city of Banaras, taking you from Kashi Vishwanath temple to some other place, a foreign tourist. And if that foreign tourist decides to give $5 or €5 for a half an hour ride, that makes that person's day. And all that has come to a standstill. So I think globally, tourism consistently accounted for more than 10% of the GDP of the globe and more than 10% of all jobs created. And the entire globe, the tourism industry has been paralyzed. So, together with also being on the committee of the World Travel and Tourism Council, we are been lobbying with the governments how to revive this industry. And I can say that today as we speak, there is a latest report which has come from UNWTO saying 50% of the world is open again. So we were coming from a 80% lockdown to now a 50% open. So I think that's already a positive news, and I'm sure uh, the Indian subcontinent can be greatly assisted in creating jobs directly and indirectly, in driving the GDP growth with the domestic tourism focus. The international will come when it will come. I think it's going to take much longer than the domestic tourism, but it's a great opportunity to focus also on the message given by the Honorable Prime Minister on the Atmanirbhar Bharat, but also on visiting some of our domestic tourism sites. The time to do it is really now.
These are challenging times, but I'm sure everybody will come out as a winner when at least the survival of the fittest will happen. Let me put it this way. Appreciate your time, Mr. Chhatwal. Thank you for joining us, and once again, on behalf of everyone, thank you for so openly and candidly sharing your thoughts on the real picture for Indian hotels, the hospitality industry, and where the future lies ahead, both in the short term and the long term.
Thank you. Thank you for having me. It's always a pleasure.